demand. And when they index, they don't necessarily care about price. What they care about is liquidity, so that they're able to go in and out. So if they buy it 1% weighting and it goes to 2%, they have to be able to sell it down to 1%. But if it drops to 0.5%, they'll buy it back up to 1%, which just means it's a perpetual bid in perpetuity. That's why there's so much volatility in Bitcoin, because nobody owns it. I mean, relatively speaking, it's irrelevant. 800 billion is nothing in the context of sovereign wealth. So I'm very optimistic that when this comes, there'll be a lot of demand, and that's when you'll start to talk about Bitcoin at much higher prices.
Hey guys, and welcome back to the Daily Crypto. Today, we have Kevin O'Leary as he talks about the future of cryptocurrency transactions and what it really needs to flourish and gain massive adoption. The Shark Tank investor highlights the developments and trends toward a regulated cryptocurrency market, as well as how they would benefit investors and businesses. Cryptocurrency regulation is a contentious issue, but according to Kevin O'Leary, crypto investors should embrace it. According to Kevin O'Leary, what Bitcoin and other cryptocurrencies need to flourish is the need to put up, ironically, some regulations for the industry. Kevin O'Leary is of the opinion that, despite the buzz around cryptocurrencies, major money players such as pension funds and sovereign wealth funds have yet to adopt the asset class. Once this occurs, which will need the use of a regulated, compliant, and transparent platform like WonderFi's, the significant gains in cryptocurrencies will begin. Nonetheless, many Bitcoin devotees are vehemently opposed to further regulations. They argue that it will stifle innovation and violates the essence of Bitcoin, which is based on decentralization. They believe that the decentralized character of digital currencies such as Bitcoin, which are not backed by any organization or political authority, is a real downside. As a result, any additional regulation, in this opinion, would be a danger to the decentralization that is a feature rather than a problem. Having said that, let's get right to Kevin O'Leary's crypto regulation forecast. Don't forget to like and subscribe if you love the stuff we provide on this channel.
Well, I mean, we'll take one country, for example, just to give you the size of scale. There's 18 different sovereign funds just in the UAE. The largest is 900 billion, the smallest is 100 billion. That's well over $1 trillion. And just, they might allocate 50 basis points, they may allocate 1%. You're talking about billions of dollars of demand. And when they index, they don't necessarily care about price. What they care about is liquidity, so that they're able to go in and out. So if they buy it 1% weighting and it goes to 2%, they have to be able to sell it down to 1%. But if it drops to 0.5%, they'll buy it back up to 1%, which just means it's a perpetual bid in perpetuity. That's why there's so much volatility in Bitcoin, because nobody owns it. I mean, relatively speaking, it's irrelevant. 800 billion is nothing in the context of sovereign wealth. So I'm very optimistic that when this comes, there'll be a lot of demand, and that's when you'll start to talk about Bitcoin at much higher prices.
In March 2022, President Biden signed an executive order directing the Federal Reserve to investigate the possibility of developing its own digital money, which may diminish or eliminate the need for cryptocurrencies and stablecoins. Following these comments, Bitcoin dropped below its critical support level of 30,000. A CBDC would be regulated, would have a centralized authority, and would be backed by the Federal Reserve. CBDCs may bring competition to cryptocurrency, since consumers may perceive them to be equivalent to digital dollars and may feel safer because they are supported by a central bank. New regulations have the potential to safeguard long-term investors, deter fraudulent conduct in the crypto ecosystem, and give clear guidelines to enterprises looking to develop in the crypto economy. Kevin O'Leary wasted no time in praising WonderFi's executive team and the work they are doing to develop an ecosystem that, when combined with policies and solid laws, would remove much of the alternative facts and noise around cryptocurrency.
Because I don't think of Bitcoin as a coin, it's software. Solana software, Ethereum software, they're all software projects, and software is a productivity tool. And I think at the end, you want to treat it as the 12th sector of the S&P, because it will be in 10 years. I mean, this productivity is not going away. I mean, it's here to stay. So it's, there's volatility. Yeah, there's rogue operators. Yeah, there's scamming and shamming and all this other crap. And there's very speculative tokens and all that. But that doesn't matter. The long-term productivity enhancements, very, very, very compelling.
According to O'Leary, since Bitcoin assets are not connected to a certain region or owned by an individual, investors must take a global view of the market. This raises concerns about how foreign government regulation would affect Bitcoin and other crypto prices. China used to be a crypto mining hotspot, but when the government began cracking down on Bitcoin mining operations owing to worries about mining energy usage, Bitcoin's price plunged as much as 8% in a single day, along with other cryptos such as Ether and XRP, the Ripple Network's token.
The real potential is making it an asset that sovereign wealth can buy and pensions can buy. That's the opportunity. That's so huge. And it's I don't know when it's going to happen, but it may not be too far off, particularly for some basic large liquid coins like Bitcoin and Ethereum, maybe, USDC, Solana, Polygon. Those are all of interest to large institutional accounts.
O'Leary described the frustration that often accompanies utilizing standard banking systems. When his firm was about to execute a contract for millions of dollars in April, a wire transfer between the United States and Canada went missing for many days, needing numerous colleagues to labor for hours to unwind the transaction and discover the monies to secure and seal the agreement. Everything was resolved in the end. But should this have happened?
Let's say this is a real use case that happened to me a couple of weeks ago. In our operating company, we're about 30% in real estate. That's one of our asset classes. So we buy and sell real estate and in different geographies. So if you want to buy something in Switzerland, you got to be in Swiss francs. So you have to take your US dollars, you have to ACH it to a Swiss bank. It takes 3 days. You have to go through a very long protocol because we're talking about millions of dollars. And your client, you have to get approval institutionally to move it. Very expensive, very slow. But in this particular case, they lost it. They lost millions of dollars for 48 hours. Couldn't find it. Even had a Fed transfer number. Couldn't find millions and millions of dollars. 48 hours later, they found it. Who gets the interest? Who pays for the fees? What about the fact that if I hadn't been able to close, I would have lost the option on that building? So all of that was being played out, 36 hours of staff time, tremendous amount of stress, trying to tell people that the bank lost the money. And I thought to myself, this is really crappy.
Dissatisfaction with the banking system is nothing new. Yet, most individuals have little choice but to adjust in order to keep cash flowing. If O'Leary is recognized for anything, it's his notion that cash flow is the most important factor in business. Let's hear what he has to say about that.
This is a really bad system. Now, if I could have just simply said to the vendor, will you accept USDC or any stablecoin? I don't care what it is. I could have sent it to them in 2 seconds with full transparency, full accountability, full audit trail in perpetuity. I mean, that's so compelling that I know with certainty it's going to happen, which is why there's, $54 billion in USDC right now. And and I think the largest account size is only 60 million. So that's nothing in terms of what it could be. And so these use cases for making financial transactions more compelling are very powerful. They're faster, they're cheaper, they're transparent. And they're 100% compliant because my audit department could go look at it and the auditor could look at it and the vendor that's selling can see it. And it's essentially a smart contract. So for me, there's no question it's coming. So I might as well own a piece of Circle, and I do. I mean, I don't know why I wouldn't want to own that. I don't know why I wouldn't want to own FTX. All of these big infrastructure plays, and it's the same investment thesis for WonderFi. WonderFi is just infrastructure. And it's compliant infrastructure. And I think it's going to be very compelling for Canadian banks one day that want to do spot pricing for whatever they decide to allow their clients to buy, because I think it'll be a limited, maybe 3 or 4 tokens in the beginning.
O'Leary is convinced that as negotiations on Capitol Hill continue, trillions from around the world will soon enter the crypto market. The signal that the global finance community is looking for is regulation in the United States.
So what happens is we're constantly being queried in terms of what their assets are, what they want. And so they want that. If you ask them, hey, listen, do you want any crypto in an index? And they say, well, we can't own crypto right now because it's not regulated yet. and they work in a regulated environment. They have regulation infrastructure. So they report market closes, they mark to market their positions, and it goes up to a compliance officer and all that stuff. So I've been, everybody's been talking to them. They'd start with 50 basis points in Bitcoin if they could. Some of them 75 basis points, some of them 1% in a portfolio. 1% of $1 trillion is a lot of money. And so you have to start thinking about, do I want to take my position before the regulator regulates and all of a sudden the pension plans, the sovereign plans decide to allocate and index crypto? They may do more than just Bitcoin. They may do some Ethereum, they may do Solana. You don't know. It's whatever they're going to do. And that's the investment thesis, is why wouldn't you? The reason that Bitcoin is so volatile is for all of the excitement about, people own Bitcoin. Nobody owns Bitcoin. It's only 800 billion, and that's a rounding error. It's a nothing burger. It's absolutely nothing in the context of financial services globally. So the whole idea is, why don't you own this before it gets indexed?
O'Leary continues to push for choice and compliance while ensuring that he and the WonderFi team create and invest in technology that inspires trust in its consumers and fosters fintech innovation. Do you believe Bitcoin as a decentralized coin would gain double its worldwide acceptance if regulations are implemented? Comment down below your thoughts, and don't forget to like and subscribe. This is The Daily Crypto. We'll see you in the next video. Bye for now.